Traders at UBA say that minimal activity is seen on selected maturities as today's Treasury bills auction takes center stage. Meanwhile, cherry-picking activities are seen across the board curve. Kenneth Onuoha, the team member, assets and liabilities at UBA, joins me now for more market updates. Thank you so much for your time on the show today, Kenneth. Interesting times we're seeing with this auction, but let's get a wrap of what the week has been like so far for the markets.
All right, good afternoon, Kenneth, and thanks. Always a pleasure having me here. Like you rightly pointed out, this week has been quite eventful. Monday started off with the UBA auction, where 500 billion was put up on offer across 3 standard maturities. What we did notice, interestingly, was that the auction was pretty undersubscribed. We saw only about 286.65 billion of subscriptions. For what that implies in this is underscores the liquidity crisis, well, not exactly crisis, the liquidity situation squeeze that we currently have in the market right now. Moving on quickly, what we saw in the results, upon release of the results, was that we saw a total of about 260.65 billion won across the 3 maturities, with the majority coming from the long end, with stop rates printing at 21.5%, which represent about a 7.5% increase from the last UBA auction. So 7.5 bips increase from the last auction. Plus, this was quite interesting to see, because whilst the short and the medium term showed some form of drop or decline in stop rates by 1 basis point and 2 basis points respectively, the long end showed a 37.5 basis point increase to print at 21.5%. Now, moving very quickly to the NTB auction today, we expect where 179.36 billion is being up on offer. 75% of that is actually on the long end, where it represents about 134 billion. We expect the general market sentiment is that, in course of the increase seen on the UBA auction, we expect to see a minimal increase in the stop rates printing today, or at worst case scenario, the stop rates being maintained above 20.7%. That's pretty much what has happened on the T-bill side. On the bond market side, like you rightly did point out, we saw a lot of cherry-picking activities, but at the end of it all, what we have seen primarily is that everyone is just being cautious, and of course all focus has been shifted to the NTB auction, and the most trades that we saw yesterday passed on the 2034 bonds, while we of course keep an eye on the bond auction that's to come on Monday next week. And then on the liquidity side, yes, it will be nice to know that there's been a lot of activities happening on the liquidity side. On Monday, we saw that system liquidity opened at about 296 billion. But by the end of the day, following the settlement for the UBA auction, that has actually shown a decline or depressed level at 87 billion yesterday in repo. So the system was short by 87 billion yesterday, and that has pretty much what has been like a wrap-up of the week so far.
Yeah, interesting when you look at that. Like you said, liquidity is still an issue there. But I'd like to get your thoughts in terms of how we can what can I expect for liquidity for the rest of this month, and also when you look at the quarter as a whole.
I would like to add that for the liquidity currently, it is pretty tight. There's been tightening around the liquidity generally. What we have seen is there's been the CBN is obviously, this is in line with the guidance of the CBN governor, where he said that we would expect to see liquidity tightening just in order to target inflation generally. But we expect to see that where the need arises, CBN will intervene. But at the moment, there isn't much coming into the system right now. So it's a wait-and-see game, basically.
Yeah, I see that the DMO listed 2 savings bonds in the market. I'd like to get your take on that and the market reaction so far.
Yes, the 2-year, for May, 2 years and 3 years bond, which is currently at 17.407 and 18.407 respectively. It is the highest we've seen in a while, and it aligns with the comments by the CBN that the rates will continually to trend towards what the MPR is currently at. Remember, the MPR is currently at 24.75%. It is interesting because this is really the highest we've seen since the beginning of the year. At the beginning of the year, it was about 11% and 12% respectively. But those are interesting times.
Yeah, but when you look at the market, I'd like to get your take on the secondary market activity so far.
Secondary market, basically, for the bond side, like I said, cherry-picking activities, across the curve generally, the major interest has been on 2034s, and the reasons is people are trying to cover their position ahead of the bond auction. Remember that the 2034 is no longer part of the bonds on offer in the bond auction that's to come up on Monday. So it has been replaced with 2033s, and 9 years 2033s. And so that's basically what has happened there. And again, the liquidity situation in the market is one that has caused cautious approach generally across the fixed income market space.
All right, but looking further down the line, we just saw inflation printout in Ghana come out today for month of April. I'm trying to imagine what your projections are for Nigeria for inflation or your expectations.
The expectation is that we would, I would expect that generally any increase seen would be not because the rate of growth of inflation lately has shown a decline generally across the months. So we expect that if there be any increase, it would be also lower than the previous months, the rate of increase from the previous month. But then we hope to see that inflation would generally be stemming downwards, which is the general guidance that we see from the CBN. Remember that the CBN governor has stated that the target was 21.4%, and that's what we're looking at.
All right, there's definitely a lot to look forward to, but thank you so much for your time today. I've been speaking with Kenneth Onuoha. He's a team member, Assets and Liabilities at UBA.